Hi there, traders. This is Brad Gilbert with the FX Market Insight for Thursday, the 8th of April. All right, now just having a look. Now, if you had a look at yesterday's FX Market Insight, I was saying that there's a bit of discombobulation across different things. The dollar, okay, still falling and really uncertain levels across the board on a lot of different pairs, right? No easy trading opportunities. Now, what we've seen is over the course of this last 24 hours since then is Treasury yields have come back somewhat, or just a little bit, enough to give the dollar a bit of buoyancy, right? Looking at the sort of long dated 10, 20, 30-year Treasury bonds, yields a bit higher, gives the dollar a bit of underlying strength. Now, there's one of the key things of understanding when trends, and especially short-term trends like we have more so at the moment than long-term trends, you have these transition weeks where the trend is in place, it stalls, it changes, but in that stalling process, that can take like a week to work out whether the dollar goes up or down again, right? And this is one of those transition weeks where there's too many different variables. You can't really pinpoint what is controlling the dollar. Now, if you've been looking across the board and you have a look at the minutes now, a lot of things will say like the Fed's come out with their minutes and they're saying they're committed to supporting the economic recovery. Well, that's nothing new. They've been emphasizing that every time they speak, but it's sort of almost like an excuse to get the dollar, the dollar shorts back in squaring up, coming back a little bit to the top side. So that's where we are. And, when you look at the commodity currencies, which is referring to the CAD, Aussie and Kiwi, right? They have fallen, right? And it doesn't make it like this. What I'm talking about, let me just explain where it doesn't make a lot of sense. So when you look at the, some of the data, right? The IVPMI data out of Canada, I should say, is a really sort of decent sized number, big number. And we got really strong numbers here, like super strong. You'd expect dollar CAD to come off with the CAD strength. But we had a situation where we've got dollar strength coming into the market, right? Here's dollar CAD with oil overlaid. You get dollar strength coming into the market. Those IVPMI numbers hardly even touch the sides. Oil still sitting back at $59 and dollar CAD tweaks above this resistance line, takes out some stop loss orders and just stalls, right? There's no consistent CAD strength with the macro data that was released, right? And that's one thing. When you see something like that, you've got to stand back and go, okay, this doesn't make a lot of sense. I can see with dollar strength, this thing goes up a bit, but with the CAD IVPMI, it probably should be down around 125.5. It's not. So you've got to be careful when you identify things are not working the way they should. Now, while we're on the technicals, as far as the dollar index is concerned, it's drifted lower. It's slightly bounced back with those Treasury yields just going up a little bit more. Much bigger clean out here on dollar Swiss. And you see like euro reaching for the stars here. If you're a bit of a candlestick guy, like a sort of almost not quite a shooting star, but very close to it. And sort of a bit of a clean out to the top side in euro. It's now sort of drifting. Dollar yen just took out the stops, now drifting sideways. Dollar CAD, okay. Too many variables in play with dollar CAD. Doesn't make a lot of sense. And then you've got, so euro up there. Sterling gets belted. And Aussie and Kiwi disappoint. Now, Kiwi, as I was saying yesterday and even last week, has that underlying weak tone, bearish tone from the changes in the property tax laws, okay, which is a bit of a negative for growth in New Zealand. So that makes sense to come off. The Aussie is just following, well, like this is the hard part. Like they're following each other. And you could say, well, is Aussie and Kiwi following sterling or euro or just the dollar move? Okay, it's a bit of a bit all over the place. It's like, obviously the dollar strength has pushed them down, but they shouldn't drop 50 or 60, 70 points. It doesn't make sense, right? And when you see that, you've got to recognize that the market is discombobulating and sit back and wait. Now, what's happening here? The volatility index, okay, under 20. Markets are very happy with everything. This is a good indicator as such for what's happening, a cross-section of the market. Is the market comfortable with what's happening with the treasuries, equities, the currencies, or the general news? I tell you what, they are very, very comfortable and happy with what things are. Otherwise, if they weren't, the volatility index would be up above up around 25 at the very least. So what you've got to do is connect the dots. As I said, the dots, if you connect the dots at the moment, they don't really paint a very clear picture. And that's what that's where your expertise as a trader saves you putting money in the game, which is at a higher risk than usual. The equity markets, okay, the NASDAQ, really the core driver, in my view, the last year or so. Now, this is pretty neutral markets, but not much happening, right? So you look at that after the Fed minutes, that means the market doesn't really, this isn't fresh news. If it was fresh news, we would have seen a much more defining move on the equity markets. We haven't seen that, okay? So once again, coming into the Asian session, okay, treat each trading session as a microcosm, right? Because we're seeing small moves in the Asian session, then we're seeing the ricochet move in the European North American sessions. I would be keeping a very close eye on, obviously, the US equity futures, see where they go, see what's happening there. That could give us a bit of a direction for the Asian session for the dollar block and the dollar. See if there's anything clear there. Keep an eye on the treasury prices. We're basically trying to nail or knuckle down what is driving what. Okay. And as I said, it's been one of those funny weeks where the treasuries, we saw a massive move higher in the yields, a little bit of a drift back, and then slowly higher again. So as I said, the treasury yields don't usually flip around like currencies or indices, right? They just slowly, gradually move. They are moving a little bit more than usual, and the Fed has said they're going to support the economy. No fresh news in my eyes. That should stabilize the treasuries and bring the dollar back. I think overall, this has been a bit of a clean out this week, but just have a look. When you are trading and you see really good trading opportunities, they stand out like a sore thumb. Now, Euro, yeah, sure, Euro's gone up, but we are in the middle of nowhere. If anything, we've got resistance here in a little bit higher in sterling and sort of the same here. But just look at these trend lines here. They got like 2 touches. They're pretty fickle, right? They're not like long-term daily trend lines that are really strong and mean something to us. What I'm trying to say is there's a lot of noise in the market at the moment that doesn't make sense, right? So just be careful. If you can't isolate the best technical setup, well, then it's probably time to sort of sit back and wait for a better trading opportunity. Now, when we say that, come back, have a look, see what else is coming out here. There's only a couple of key things coming out for the remainder of the week. Today, industrial orders out of Europe. Well, I'd have a look, producer prices as well out of the Eurozone. And you've got the sort of weekly jobless numbers out of the States. It's not the non-farm payrolls by any stretch, but that's the only stuff we've got to look at. And then you come into Friday, Chinese CPI, PPI, some unemployment numbers there out of Switzerland. And then we've got the CAD employment numbers on Friday out of Canada. So not much to really, jump into wholeheartedly at this point. And as I said, you can't push the market and make it do what you want. You've got to identify what's going on and then trade the opportunity that pops up. If you're just running in and just trading things on very short time frames, you can make like a couple of bucks. But I tell you what, you're more often than not going to lose a lot of money when nothing is really happening, right? So just relax, take it easy, and the picture can change very quickly, right? So don't forget, if there's some clear news out, right, and you see a very clear move in the equity markets or the treasury markets, well, then you'll have very specific moves in the major currency pairs, and then you can nail them, okay, if you've got good entry levels. At the moment, I don't see any of those 3 things happening. So it's, back to the sort of drawing board as such, waiting for those opportunities to build. All right, guys, sorry I don't have better news for you, but that's what trading's all about, being patient. All right, guys, have a good one. Cheerio.